for much weighted topic of FX12 training program. May I request Mr. Slobodan Drvenica to enlighten us with his views.
Thank you very much. Welcome everyone. I'm glad to see such a big number of people interested in this. This is very encouraging. I hope I find you in good health in this very difficult period of time, which unfortunately this coronavirus brought to whole world. But I would like also to point on something else, that every crisis, and this one too, although this is the biggest one that I remember and I lived, provides some good opportunities. So let's try to take the best thing from this, apart from the bad things. Of course, we need all to take care about ourselves, to take all the required measures, but let's try to get some advantage out of this. As you know, crisis itself is a period when things drastically change. What is constant in all these events is money. Money doesn't disappear. Money just changes hands during the crisis. So let's try to find a way how to get this money, because it's somewhere there. Some people lose money during the crisis. Some people become extremely rich during the crisis. This is the way how it functions. So let's see and try to find a way how to get some money. I will just continue what Mr. Said and Mr. Alukesh said. I will add some more things. They mentioned some things that I was thinking of, but in any case, just what Mr. Said said about Forex trading is gambling is not gambling. It's a matter of analysis, a matter of discipline, matter of strategies. This is all the point of Forex trading. Like any business, anything you do, you need to be well prepared, you need to be well trained, and you have to have your own plan, your own strategies, and you are very likely to succeed. I've tried this during the years. I'm 25 years in the industry. I've seen many things. I've tried many things. I learned something from mistakes of others. Unfortunately, I learned something from my own mistakes, which is the worst scenario. But sometimes the life goes like this. So we need to learn how to handle all these things and how to be positive and profitable all the time. Actually, this is the main aim of trading Forex, is to make some profit. Of course, some psychological things come along with the feeling that you succeeded, that you won, is priceless. We all have a sort of ego inside of us, and we think that we are, if not the best, but we are good and we can do something. When you prove to yourself that you did something good, that's something that gives you boost for further steps, and it means that you can proceed and enlarge your investments, your trading things. It simply gives you a boost and makes you feel better and function better. So I made a short presentation, but most of the time I will be talking to you. I want to basically share my experience and my opinions with you, and this is my main aim. So I think you can see my screen now. Today we are going to talk about Forex itself, introduction, what is this and how it functions, some statistical things, some definitions about Forex. What I would like to also focus is the current crisis, but any period of crisis which gives highly increased opportunities to profit in Forex markets. This is very important because usually, always actually, the fast market and busy market gives us opportunity to succeed. So in Forex, Forex itself is very popular. It's been 15, I would say even more years that it became extremely popular, that made a huge expansion, boomed in the world. And we have now millions of traders in comparison to some period from my beginnings, let's say back in the previous century, when a very limited number of traders were seen in the market. The process itself of trading was quite complicated. I would say slower than now, much slower. And it was a struggle to fulfill all these requirements to finally get your trade. In comparison, when you take nowadays trading online and the telephone trading, it's a huge difference. We are talking about minutes in establishing the line, passing your order, getting filled, getting information back, while now with one click of mouse, you are in already. You bought or sold and you entered the market. And this is a big advantage that needs to be taken. Actually, we live in the in the time now, which is like this. So it gives us great opportunities to succeed. What we need is to learn what is this, how it works, what are the main principles, tools that are used, which is I would say the most important thing, along with the psychology and the risk management. And once you have all these important factors in one place, then you can start, of course, more trading, more experience gives you more confidence, and you learn more, and you are getting better and better. Every beginning could be difficult or could be easy. In my experience, I've seen majority of traders who made money in first 10, 20 trades. Some of them made significant money. I usually call it luck. It's the luck of beginners. The God watches them and say, okay, get in, get some money, and then you will learn the lesson. Some of them who are clever learn the lesson and stop or start learning more, trying to get more advanced, to get some more knowledge. Some of them think, oh, I made money, I'm going to make it every time. No, you're not going to make it every time. There are certain rules in the whole world, so including Forex, that if you succeed in something, market itself goes in the cycles, goes ups and downs. So trading is the same thing. So if you succeeded 10 times, you can expect that few times you may not be successful. So you have to be ready for this. You have to be psychologically prepared. You have to have certain knowledge and learn every day. I still learn. I'm 25 years in this business and I learn every day. I hear something new and I write it and then I memorize it. And especially if it's something very important, then I highlight it with red. So I know that this is something new and I need to learn. Don't be embarrassed to ask. Don't be shy to show that you don't know something. No one knows everything. We are learning every day. So once you reach certain level, when you have quite a good education and some of experience, then you can say, I'm a trader and I'm going to proceed. Forex market itself, by definition, is something, it says itself, it's a marketplace where currencies are traded or exchanged. So it's the place where people gather. Nowadays, it's virtually, and they exchange. Some of them want to sell dollars, some of them want to buy dollars, some want to sell euro or any metal or commodity or stocks, whatever. So Forex market is the place which exists around the world. It's not, it doesn't have any centralized stock market like centralized, location like stock market, New York Stock Exchange, for example. It is spread globally, and it's called as electronic network, which collects individual traders, institutions, brokers, banks, various subjects that contribute into Forex trading. So it is by definition. Forex is very popular, and I'm sure that you have already heard about this. I just want to start from the beginning because I was told that a number of you have no or very low experience. So let's not miss anything. Let's start from the scratch and then build up our knowledge. Next thing, what is important to say, Mr. Alukesh already said, it's the largest financial market in the world. In my presentations, I usually like to say it's a beast. It's a dragon. And you have to respect that beast because it can eat you easily. If we see that it's average turnover, so sometimes it goes up to 7 point something trillion US dollars per day, but average is 5.1 trillion US dollars. Just in comparison, the latest US government's fiscal stimulus was worth 3 trillion. This is almost double. So it's a huge machine that works every day and increasing all the time. Another impressive figure is that it's worth 1.93 quadrillion. I saw the number when I was preparing this. Believe me, I will need the whole line to just put all these zeros, which is bigger 2.5 times than the global GDP, the whole world GDP. So this is what you, from this you can understand what kind of machine it is. And we need to find a way to get in. As I said, Forex market is a beast and can eat you easily. I've seen many people burned, eaten. They don't realize what's going on. But if you approach with a certain systematic way, if you respect this market, and most of Forex trainers will tell you, you must respect Forex market because you may be loser at any time. It's much bigger than all of us, much bigger than even big traders who are in the market. So according to our possibilities, I mean, financial possibilities, size of the account, and according to our knowledge, experience, we are going to find our place in this market and try to get the best out of it. As you know, major world centers are also major world capital financial centers. Usually the Forex market follows the sun from the sunrise to sunset, starting from down under from New Zealand, Australia, moving through Tokyo Stock Exchange, then moving to Europe and ending the day in United States. So it is running around the clock, and it's always at least one big world center is open. So this gives us opportunity to have access to the market. As I said, it's open 24 hours in 5 days of the week, except weekends and some holidays that some markets are closed. The practice that markets are closed for holidays is fading. It's been over 10 years, I would say. And nowadays we have two holidays that everything is shut. It's Christmas and the New Year Day. All the rest of holidays, there is partial closing. Some exchanges are closed, some are open. Forex market runs, and majority of brokers keep their business open even during the holidays, although with the lower liquidity, with higher volatility, but they just don't want to be out of the game. They all want to be in the game. People like to trade. I had the experience in trading during the holiday years ago when the market was flat. And when I asked for a quotation to get the price, the spread was huge. And I told the client, I said, this is not worth. I want to trade. I said, if you want to trade, that's your price. So basically, you have all the time possibility to access the Forex market. What you need is just computer and internet connection. You download the platform. You have, assuming that you have already opened the funded account, and then you can trade. I've seen many people on the beach, in the forest, jogging, and they just stop, take a look at the telephone, do some transaction and continue, or people sitting in the office. I'm the trader who likes to sit in the office. I don't trust telephones. I don't trust anything that is not a big screen in front of me. I want my peace. I want to concentrate. This is individual. Everyone is different. So this is, regardless of this, you have opportunity at any time during the 5 working hours of the day to trade Forex. As I said, it's one of the top things and the most popular things to make money. And due to the boom in technology, the things I lived, and I've seen how the things drastically changed in past 15, 20 years. In my beginnings, we were trading through the telephone. You call your broker, usually in London. Then you ask what you want. Then you get the needs to wait until you get your price. And then you say yes or no. And then they say, okay, you bought or sold, or we lost the price, again, requote. This is time consuming, it's money consuming, because during the move, you may lose $1,000, $2,000, $3,000 easily if the market is fast. Nowadays, you have the platform, you have the prices running, you have much narrower spreads. So it gives you opportunity. Most of brokers now offering spreads in 4 digits, so it's even more fine-tuned. So you can lose 1 or 2 pips if you are hesitating, but if you are fast, you can catch always your price. This is great opportunity for traders not to miss anything, especially those who do not have big accounts. So every dollar is important. Of course, in any case, every dollar is important, but it gives facilitates those who are trading not to lose anything, but instead to take the maximum from this opportunity to trade. As I said, history started a long time ago, but Forex was something that was privilege of big players, governments, banks, central banks, and some wealthy individuals. And remember at my beginnings that requirement was $100,000 to open an account. I stayed with this when I am asked by potential trader, what do you think, how much money I should put in? I usually say, if you can afford nothing less than 100,000. It's not that I'm trying to cheat or something. Simply, it gives you enough space to take any move against you. More money gives you safety. Of course, you are not going to use all this money. You are going to use just one part, but the rest will be reserved, will be thick wall behind you who will hold you not to fall. While small amounts require much more work, much more planning, much more calculation, and of course, much more risk, because any move, if you have $50 or $100 account, any move against you can wipe you out within seconds. But when you have something big behind you, of course, I'm saying this is recommended, not necessarily that you have this money or you are willing to invest, but it's a good thing. More money in the account without using everything, I would say not even half. This is my strategy. Out of 100,000, I will use maybe 10 up to 20. The rest still is reserved. It's something that gives me safety, that I can sleep overnight, that I don't think what happened if the market moves. Of course, there are extreme situations, but let's talk about normal market conditions. So it's important to have some safety while trading, and Forex market facilitates you with a lot of things that were not seen before. So it became like Facebook, like something like this. Everyone has the trading platform. Everyone is following the prices. Everyone is interested. Where is euro now? Where is dollar now? Especially in the time of crisis like it's now. This is something that fuels market, that moves the market in wild swings up and down. And this is where we have our opportunity to make money. Forex market is the least volatile financial market, but it's very liquid. Liquidity means that you have always enough opportunities to jump in. It's not a flat line that you are looking to buy something and no one is selling, or you want to sell and no one is buying, but it's always active and there is always something moving, something is happening. If not in Europe, then something happening in Australia or in America or in Japan. There are always events, and there are always people who want to trade, who want to exchange money. So this gives a great boost to Forex market, and we say that it's most of the time very liquid and very good, giving very good opportunity for trading. What drives Forex market? The main drivers are supply and demand. So when we say liquidity, when we say the market is very liquid, it means that there is plenty of supply and demand. A number of market participants want to buy something or to sell something. So you have opportunity whenever you want to jump in. You see something on your chart and you realize it's good time, let's say, to buy euro against US dollar, and you jump in straight away because there are plenty of offers also. So it gives a good opportunity. But big supply and demand drive is the main driver, and gives this liquidity to the Forex market. Other important things that need to be seriously considered are the two major chapters in Forex market, fundamental analysis and technical analysis. These are the subjects on its own. When I make the presentations for this, I usually take 2 to 3 sessions only for technical analysis and 1 to 2 sessions for fundamentals. There are plenty of things that influence the market and have strong impact on the market. If it's something to do like nowadays, we are facing the high uncertainty about US presidential election. We still don't know who is going to be president. One day story goes for Trump, the other one story goes for Biden. These are the things that move the market upside down. 2 days ago, the market was wild. The range for most of the major currencies was over 200 points during the day, but it ended somewhere close to the level where it started. So we had a wide range, wild swings, but no clear direction because we don't know yet who is going to be the president, next president of the United States. And this is the key question the markets, the people in the world, but people, traders in Forex market ask. Why? Because they are going to get signal. What's going on? Trump is going to be president. How is going to affect the market? First thing is that Trump is a businessman, so he runs America as a company. So first thing is that stock markets are likely to go higher. Second thing is that the dollar in reaction will go lower because stock markets, stocks are risky assets. Dollar is usually non-risky and used as a safe haven, so for safety. And these are the things that we should look straight away. And this is how it influences the market. Or central banks. For example, yesterday we had the meeting of Bank of England. They said we are not changing interest rates. Usually people look what is going on with the interest rates. Are they going up or down? And this is the main indication about their investments. If the interest rates are going lower, it means that a market is going to be to the downside. The currency of the country which lowers interest rates is going to go lower because the money gets cheaper. And vice versa, if the central bank increases the interest rates, the money becomes more expensive, and of course the currency goes up. Nowadays we have a specific situation which lasts from the beginning of the previous recession, which started in 2008, when the number of central banks lowered the interest rates and kept them for over 10 years at ultra low levels, 0 or even below 0, because the situation did not improve enough. The problem is with inflation. I'm not going to elaborate much about this now, but it's very likely that this is going to last for some more time. So low interest rates, cheap money, and the thing that drives all these things is very low inflation, gives us indication that most of currencies are going to be pressured based on this factor. Now we have other factors which are included in fundamental analysis, very important things. For example, economic indicators from each country. United States have dropped in the third quarter by a record, pardon, the second quarter by a record 31.4%. The biggest world economy collapsed. And it's not, in the United States. I'm just giving a sample, as this is the biggest player in the world, the biggest economy. All other economies, nowadays, when we face the new wave of coronavirus, which is getting wild in Europe, we heard that there are plenty of new lockdowns. This is very negative news for the Forex market. So it's something that should be seriously considered. That implies that most of the economies in the Eurozone will decline further. Germany already announced yesterday that they expect a certain slowdown in the fourth quarter, and they don't see any improvement in at least the next 2 years. These are the things that are important and markets closely watch. Like today we have, in a while, actually in 25 minutes, we have release of US non-farm payrolls, which counts. It's a governmental indicator, governmental survey, pardon, which counts the number of new jobs created during the previous month. And this thing is very important because each economy stands on four main pillars, and one of them is the labor sector. So if you have weak labor sector, then it means that things are not doing well in that economy, and this is implying about the performance of the country's currency. So we are going to see how the jobs are, how much the jobs were created in the United States in October. Very important. So all these things are economic indicators and give us a great opportunity to understand, to get signals what's going on and how the things will move in the near future. On the other side, we have a technical analysis, which is pure technical tool, but very accurate and very good. And I'm the one who favors technicals against the fundamentals, but I use both of them in order to get the best prediction of the market movements. Combination, most of the trainers who perform training for the Forex trading will tell you that combination, or even if you Google it, the combination of both approaches or both systems is giving the best results. So we have to know how the market moves. So we have fundamentals. So let's say today is American GDP. So let's see how it's going to be. Now let's see what our chart says, what our indicators say, which direction they point. And if they point up, make sure that the market will jump, especially with those indicators who are leading. So they give you signal before the move actually happens. So you have early signal, and now it depends only on your character. If you are an aggressive trader or you are a conservative trader, whether you will jump straight in when you see the signal, or you will wait some time to things to change, things to get better. Let's say to get a better signal, a stronger signal, and then to jump. But definitely you can get. So these things need to be considered, and I think the London School Academy is giving a full education about this, and this is very important. Every trader must have this experience. I wouldn't suggest you enter market just blindly, thinking, yes, I'm capable of doing anything, up to the point. But it's a huge risk, and I don't think it's worth losing money for such things. What else is important in these things? It's the trading psychology. There are whole chapters about this, and risk management. Be very careful with the risk. Always calculate it well. And before you start trading, you have to be 100% sure how much money you are willing to risk. And once you set your risk policy, you don't change it. Because if you keep changing your risk policy, it means that you are not stable, and you simply start to gamble. As I said, trading psychology also a very significant thing. You have to be prepared yourself. You have to know things, how to do the things, and you have to be stable while trading. It's not every day that you will trade. Maybe you will make 10 trades today, but you will stay 10 days out of market because lack of opportunities, or simply you just don't feel. It's not a must to trade. It's a must to make successful and good trade. And the good trade comes when you prepare yourself well, when you take into consideration all factors that influence the market, and when you are psychologically ready. And the important thing that you have strategy. Strategies are things that you create yourself according to your preferences, according to your needs, according to you. You design it and then you test it. Not necessarily that first strategy you create will be successful. No, you may change it 5, 6 times, 10 times until you fine-tune it and you find the proper one, the right one that suits you. You feel comfortable, you feel self-confident, then you can go and make money. But in any case, Forex market is a great opportunity. And speaking from my own experience now, I'm not speaking on behalf of anyone else. And you need to have all these important factors ready, fulfilled, observed and followed, and success will be there. Something else I would like to talk today is these opportunities that we talked about in the previous sessions. So let's start. One of my favorite is the crude oil. Crude oil gave us great opportunities since the coronavirus crisis started sometime in January, February. And since then, it's still very active. And let me just find the proper chart. So if we go back to, this is somewhere here. So it's mid-January, somewhere here when it started. The oil price was ranging since for the most of the year 2019, didn't have some significant moves. And then when the crisis started, if you remember, it started in China. China is the biggest oil importer, biggest market for oil. So of course, when China goes down, everything goes down. So the price started collapsing. I had my level at $50 per barrel, and I said that will be good opportunity to enter short bearish market if it breaks clearly below 50. It happened somewhere here. This was in the third week of February, when already the crisis in China was exploding and the world started to fear. We still didn't have a big impact, but the markets already reacted. So this is what I said, leading thing gives you indication even before the thing bursts, before it explodes. So I shorted crude oil below 50, I think something around 46, 47, something like this, and just let it go. There was a big collapse at the beginning of March when it became more spreading more through the world, and the crude oil collapsed. I remember I wanted to see this and never thought of that I would see, that I will live such a thing, oil price to go close to zero. Actually, something around 30 to 25 was the minimum level that I could have imagined. At one point, I saw minus 40 or minus 38, something like this. There was a period when the price dropped. Of course, price cannot be negative, but due to strong offer and no demand, price dropped. But this is the lowest historical of the contract of that month. It was 6.52. It was hit sometime mid-April this year. So we had a great opportunity. We had a signal. China is shaking. Something will happen. So the first thing that will react was oil and commodities, and especially the oil, maybe some other metals that China heavily imports. So when you have certain things, you just need to see these signals and just put them together and say, yes, something is going on, something big is going on. So let's see. I was right in this case. I came out somewhere. I'm a conservative trader, so I was waiting for a good signal. And when it started reversing up, I took my profit here. The profit was quite good. I wish I had more money in the account to double, triple, or make it 20 times bigger position. I could have made millions out of this, but I felt nice. I succeeded, and it was a great boost for me to continue trading. How the situation is going now, we can see that this recovery lost steam. It cannot proceed. Why? Because things are happening, new wave of coronavirus. Number of economies are slowing down again. Slowdown of the economy means slowdown in the oil demand, and people are simply selling oil. This is sort of congestion here, but it's still aligned towards the downside. We just need to wait for news which will give us, and I think shortly we'll have this news which will say that global economy is again contracting, and this will send the oil price again lower. I would say down to $20 at least, if these things occur. If the world manages to escape this disastrous scenario and manages to fight the coronavirus and emerge
Mr.
from this
Slobodan,
current.
may I pause you for a second?
Of course.
We have some issue with your screen. The participants are not able to see your screen fully. Your screen is not working. Can you?
I'm sharing the screen, and it says you are screen sharing. They don't see it at all.
No, there is a screen, but it's not moving. We see some graph, which is there from a long time.
Yes, because I put this graph. Let's change the graph. So let's see if there is something else important. Let's talk about dollar now, another opportunity, or let's talk about gold, which is the most important.
Please go ahead.
Do you see change? Do you see change?
No.
You didn't see that I changed the screen, the chart on the screen.
What you do is you stop share and you reshare again. Stop the share. Stop the share.
And
okay, now we can share again.
Is it better now?
Yeah, now we can see exactly.
You can see me moving mouse.
This is what we were waiting for. Yes, okay. This is something which is very interesting. This is something the students should know.
Oh yeah, these are the most important things.
Yes,
what else is important to mention? And these are the highlights that I've just picked up, and there are plenty of cases like this in the market. Is the market the behavior of certain important financial instruments? We mentioned the crude oil. Now we're talking about gold. Gold reached the levels above $2,000 per ounce. If we just take a monthly chart and see, let's say in 2015, the gold was around 1,000, slightly above 1,000. So in 5 years, gold price went up $1,000 per ounce. It's a huge move. What does this mean? The movement in gold usually reflects the crisis. Gold is #1 safe haven instrument in the world. So when the situation in the world is uncertain, when there is a crisis, when there is a war, when anything that traders feel that they are not safe, they will jump from their stocks, from their euro position, sterling position, and they will move to gold. Gold, Swiss franc, Japanese yen, and the US dollar are the most famous safe haven instruments. So when you read technical reports, pay attention what they talk about risk. Is there a risk appetite or risk aversion? This is typical sample of risk aversion when the market goes up. What caused this move? It was a recession which started from 2008, and basically the world managed to emerge from this crisis sometime in 2018. And then coronavirus came, and then fresh uncertainty on top of freshly recovered, not fully, but recovered global economy. And traders just said, that's it, it's not safe, so let's go move to the gold. And gold spiked to $2,074-$75 per ounce. This was in August this year. The market observers and analysts were operating with 2,000 level. It's been well 2 years and above. And I was also mentioning that it's very possible because we have a sort of a very strong trend to the upside. And this is, and if you consider all the fundamentals that are negative, slowing down the economy, global economy, low interest rates, and then Corona came on the top of everything. Unsecured markets, traders feel very unsecured, and they jump into something which is safer. In this case, is gold. So when you have such a thing, you don't need to think much about this. You just say where I'm going to enter this uptrend. The golden rule of the market is trend is your friend. So if the trend is up, trend is uninterrupted movement of certain financial instrument in given direction. In this case, is up, it's bullish. You don't invent hot water and say I'm going to sell here, it may go down. These what if theories, personally, I don't like them at all. It's if you say I'm walking in the street, what if sky falls and kills me now? It's the same thing. When you have such a strong move and you have all indicators, fundamental and technical, pointing to the upside, you don't go and sell, you buy. So this is great opportunity. So we saw two big, great opportunities for traders. Either you do it on daily basis or longer term trading. Gold is a good investment for longer term trading. Let's say you just keep buying, doubling up your position and increasing your stop loss orders. So you protect the downside, you protect your profit. Just to give you a sample, I have some traders who asked me for advice, and we spoke sometime last year, and I told them that it's very likely that will go to 2000. When it reached 2000, they called me and said, you were right. I said, forget it if I was right or not. Did you buy or not? And all of them said, yes, I did. Okay, did you put your stop loss, protect your profit? Yes. What now? I said, wait for some time, because 2000 is very strong. It's psychological barrier. It's not going to be taken out that easy. It's going to spike higher, make correction. Exactly what I was telling them, it happened. And it's going to try again. As long as certain levels I mentioned to them, which levels hold, you are safe. A number of market analysts already talk about 3000, which is not something that we can say it's very unlikely. No, on contrary, it's quite possible if the things continue to develop in a negative way as they've developed now, talking about global economy regarding coronavirus. So I just presented you two very good opportunities. We can talk about many of them. Let's just, for example, take US dollar. We take the dollar index, which measures performance of the US dollar against a basket of 6 major world currencies. So let's take monthly chart of dollar, or daily chart looks even good. In the past few days, we had a sharp drop of dollar. It happened due to the change in risk mode. Risk shifted towards the risk appetite. So riskier assets were favored instead of dollar. What was the story? It was main reason was uncertainty about U.S. results of U.S. presidential election, and fading hopes that initially fading hopes and then fresh hopes that U.S. government will agree about new package of the fiscal stimulus to the country, to the businesses and the workers, because America is struggling now. They have already spent $3 trillion of the previous package, and now they are desperate for more money. A government cannot agree. We have a strong fight between Republicans and Democrats in the US Parliament. Simply, they cannot agree. So these things give you opportunity for trading. Initially, they were saying it's quite unlikely there will be no stimulus, so the dollar went up. Once they started saying that it's quite unlikely that stimulus will be agreed before the end of the presidential election, and then before the end of the year, the dollar just went down. When they said that it could be pardoned, it could be agreed, as Biden is leading now on the election race, traders started thinking that, okay, so if he comes, there will be more money in the market, so we are more in the more risky mode, so let's sell dollar. And look at these moves in 1, 2, 3, 4, 5 days. The dollar index moved over 2 big figures, so it's over 200 points. You just multiply by $10, which is roughly the value of 1 pip, and you will get over $2,000 in just 5 days. And that tells you everything. Of course, you have to apply all these rules, all these analysis in order to be successful. Do not gamble with the market because it could be very dangerous. Let me just take a look if there is anything. Someone mentioned the stocks. They are also very significant. And let's take a look. This one is was always very interesting. Facebook. So if we take a look how it went up, let me make it for you. This is from March 2020 when the Corona crisis exploded. So we had one sharp move higher. All these social media actually, most of them actually benefited during the crisis. So this is great opportunity to make money. We are talking about 136, which was the level approximately 137, let's say, up to 300, over 300. So almost doubled. This is opportunity. This is when you see the money somewhere and you just pass by and say, okay, it's not mine, I'm not going to take it. No, it's opportunity to take it. Maybe someone left it for you. I'm giving maybe bad sample, but if there is opportunity, you need to catch it. Because this is the way to make money in the market. Do you think it's enough samples? Because there are plenty of financial instruments that react in such a situation, and especially coronavirus. What I wanted to say is that coronavirus is the greatest opportunity. This is the coronavirus crisis. It's the biggest crisis I lived, and believe me, I'm old enough. I lived the wars, I lived the crisis and everything, but this is so far the biggest because it's global. So when it's a global crisis, there is no safety to say, okay, now there is a problem in Europe, I'm going to move to Australia. No, Australia is hit also. You cannot travel to Australia. You cannot enter the country. So the problem is global. And the markets are getting wild on these things, getting highly volatile, giving us plenty of opportunities which need to be grabbed. Because opportunity comes once and you miss it, it may come second time, may come third time, but don't miss it every time because it means that you are not interested. But if you are not interested, then if you are interested, then you'll be researching market movements. I have this habit to read the newspapers early morning when I get up, just to see what's going on in the market. Usually if you open any of the major world financial news or portals, newspapers or portals, you'll find enough information to, because whatever important happens, it's usually on the first page. So you just open and know, okay, they say, let's say, Trump won the election. I know that Dow Jones is going to shoot up, dollar will further go down. So it's opportunity. What I will say to my traders, what I will do personally, okay, let's try to get some S&P up, S&P longs or NASDAQ or Dow Jones. Let's sell dollar, let's buy euro, let's buy sterling, things that are, because usually currencies are moving in opposite directions. So if the dollar is down, you can expect riskier assets to go up. So if you sell, let's say, dollar as a dollar index, you can buy a euro against US dollar and you double your position. What is important in this case is not to spread yourself into too many things because it's quite difficult to follow. Once you lose control, you are very likely to lose money. Choose one or two instruments and jump in and try to make as much as possible money. And something at the end, all these things that I mentioned are chapters on their own and subjects that you can talk for 2-3 sessions. But I'm going to try to make it very short. It's very important, risk management, protecting your profits, protecting your money. So always calculate how much you can afford. Decide if I can afford losing 5% or 10%. This is my limit and I'm not going above this. Follow what you said, because if you keep changing your mind, it means that you don't respect yourself and you don't respect your money. So establish your proper risk strategy according to your possibilities and follow it strictly. Make yourself disciplined. The discipline is one of the key things in Forex trading, apart from knowledge about market itself, market movers, technical fundamental analysis. Discipline is the key thing. Otherwise, you will enter into gambling field. You'll be not in Forex market, but you'll be in casino, and you'll be just sitting and waiting. Maybe the red will fall this time. If not this time, let's go next time. And every next time you have less and less money in your account. So this is not recommended. As someone who is a long time in all these stories, I will not recommend, but just tell you, no, don't do this, or you don't talk to me. I'm the wrong person to talk about gambling. But systematic approach with good psychological preparation, good knowledge, and discipline as the key thing is very likely to give you good success, good profits. At the end, we are trading Forex for money, not for glory. So glory comes after. It's good when you feel nice. It's good if people mention you, this guy made 2 million last night on this, or last month on this. So it's good, but we all trade for money. So let's just find the best way to fulfill this target. Important is also that you trade through trustful houses who provide, the companies who provide services, in this case brokers. Regulators are very tough with these things, but still you can find a number of those who are trying to mislead you or just simply make you lose money. So always go to trustful companies which are well regulated, have been established for a long time, have a good history, have good financial clear books and all these things, which is one of the important things and good part in all the Forex trading. And that will be, I think, all for today's presentation from me. I would like to hear if there is any question. I'm getting some
so what we can
comments.
do is, okay,
go ahead.
We're getting good comments. I will read out some of the comments. It is from Mr. Nitin Somavanshi. He says, it was a good experience to listen to webinar arranged by Windsor Brokers team. I would like to give many thanks for allowing me to the session. And Kalpesh says, it was great, sir. I wanted to ask. Yes, Mr. Kalpesh, you can ask your question. You can type it in the chat box. Mr. Slobodan is here. If not, Mr. Slobodan, can we have the question and answer session in the next session? I will just pass on to the
no problem
host.
At all.
Okay. May I request Mr. Shaz or Ms. Nora to take over from here?
Thank you, Mr. Slobodan Drvenica, for a wonderful session. We all have learned a lot from this.